Most traders think the more they trade, the more they make. But after 8 years in the market, I learned that the opposite is true. The best trades are not the ones you take the most, they are the ones where everything aligns. In this video, I show you the exact 5-minute strategy I use to find high quality entries using just one simple indicator. The first thing I do is open my chart and I check one thing is the 50 EMA. If price is trading above the 50 EMA, I only look for buy opportunity. And if the price is trading below the 50 EMA, I only look for sell opportunities. This simple rule keeps me trading with the trend instead of trying to fight against it. The 50 EMA remove that confusion and help me focus only on the highest probability setups. Now this is where patience comes in. One of the biggest mistakes traders make is entering when the market is already far away from the 50 EMA. The problem is not that the trend is wrong. The problem is that their entry is too late. Instead of chasing the market, I wait for the price to pull back toward the 50 EMA. This is where I can enter with a better risk to reward ratio. I am not buying when everyone is excited or selling when everyone is panicking. I am waiting for the market to come to my area. But even when price reaches the 50 EMA, I still do not enter immediately. This is the step that separates good entries from bad entries. I wait for a confirmation candle. For a buy trade, I want to see a strong bullish candle close back above the 50 EMA. And for a sell trade, I want to see a strong bearish candle close back below the 50 EMA. As you can see here, this tells me that pullback may be over and the original trend is ready to continue. Now let me show you some trades that I already took. As you can see here, the market is trading below the 50 EMA. That tells me I should only focus on sell opportunities. I wait for the price to pull back toward 50 EMA. And when the price reaches 50 EMA, I wait for the market to confirm the rejection. Then a strong bearish candle close back below the 50 EMA. That is my signal to enter the sell trade. My stop loss goes above the recent swing high, and my take profit is placed at the next major support level. Here, as you can see, the market continues downward and reaches my take profit. Now let's look at the same strategy in uptrend. As you can see here, the market is moving upward and price staying above the 50 EMA. That immediately tells me I am only looking for buy trades. Now I wait. Eventually, the market pulls back toward 50 EMA. At this point, many traders become scared and think the trend is over. But I am waiting for confirmation. The price touches the 50 EMA and then we got a strong bullish candle closing back above it. That is my entry signal. I enter the buy trade at that close of that candle. And my take profit is placed at next major resistance level. As you can see, the market continues upward and reaches my target. So this is the exact 5-minute strategy I would use today. It's not about taking more trades, it's about waiting for the right setup. First, identify the trend using the 50 EMA. Second, wait for the pullback. And third, wait for the confirmation candle before entering. That is the difference between chasing the market and entering with patience. If you found this strategy valuable, make sure to subscribe because I will continue sharing real trades, simple strategies, and the biggest mistake traders need to avoid. Thank you for watching and I will see you in the next video.